Hey guys, I want to talk about internal trends and external trends because a lot of beginner traders still need help on understanding that and trend shifts so they can actually find trade setups. So we're going to go ahead and make this a simple tutorial that you guys can actually understand because I know it's kind of hard to understand all this crap on YouTube because it's just too complicated and they're not getting to the point. But today I want to actually do that with you guys. So hold on a second. There we go. Alright, so right now we're on UJ, right? I trade Forex and I trade US 30, gold, futures, things like that. But I wanted to get right into it and talk to you guys about the internal and external trend. So these blue circles you're looking at, I've said in my short form content, these are called the Eclipse tool. This is the Eclipse tool in TradingView. I use these blue circles to basically highlight market structure, the market structure's highs and lows of a trend, right? So I don't use lines because these actually kind of highlight them way better. So you can just quickly go on the chart and view the trend. It's way more professional and neat and organized. So this is what I would recommend first before we even get into the video, is just to use these blue circles for your video. I'm sorry, use these blue circles for your market structure. And what I do for my market structure is I zoom all the way out. So I usually use the 1 hour chart for my time frame. I zoom all the way out, right? Like, see how the screen is zoomed out? And then when I'm zoomed out, I make sure price action is all the way towards the left like this. And the reason I do that is because when it's towards the left, it enables me to actually view the current trend rather than having it in the middle of the screen. And then look, I'm looking at all this past stuff over here and trying to mark this up, and I see a lot of traders do that. So just zoom out, number one, and then number two, drag it to the left. And this is going to let you see the obvious trend, which is when we all start, we use trend lines. And so that would be like a bullish trend, right? But I don't use trend lines. Market structure highlights the actual highs and lows that make the actual trend, not just following an imaginary line and trading off that. It's way more specific than that. So, like I was saying, there's your internal trend, and then there's your external trend. And before we get into that, I want to write down what I just said, by the way. So, step one, zoom out charts. Step two, okay, so step two, use Eclipse tool on TradingView to highlight your highest and your highest highs and lowest lows. So that just means the highest high there's and then the lowest low. So I could have marked up, if you see where I had the blue circles, I could have marked up this as a low, that as a low, and all this internal structure here, but that's not what we're doing right now. We're doing the highest highs and highest lows. So the highest highs are up here, right, where I'm putting the blue arrow, and the lowest lows are right here. So that's what that means. So we're gonna actually zoom. Shit, hold on. So we're gonna actually zoom out, and yeah. So I hope you guys can see this. So the next step is we're gonna get into internal and external structure. So external structure obviously is the outer structure slash your actual trend, the 1 hour, and then the internal structure I use the 15-minute, 30-minute, and 5-minute. So right now this is the 5-minute. Okay. Okay, let's go on the 5-minute. All of this right here is your internal structure. So starting again, zoom all the way out, drag it to the left, and then this time we're actually going to zoom in since we're in an internal structure. So once you drag it to the left and you see the obvious trend, which is it's descending, it's not going up, right? So we're going to go like this. And this is helpful for your beginner too. So you see, I kind of already marked it there with those little black trend lines. Where I'm actually going to take this tool and I'm going to mark it up again. So we're going to start from the current low, which is here, high, low, high, low, high, low, high, low, high, low. Okay, so you see that? That's bearish. Okay? And so if I'm buying, I want to make this really simple. If I'm buying, I need to see a break of structure. Sorry, I didn't mean to zoom that all the way in. If I'm buying, I need to see a break of structure. So what does that mean? A break of structure can be known as a disruption of a trend. So a break of structure is just when price goes up like that and disrupts the trend because the trend was what? Bearish, right? So we're gonna stop and we're gonna write that down. A break of structure is a disruption of a trend. All right, there we go. And now this doesn't necessarily mean that we're going to trade this. Just because it disrupts the trend doesn't mean that the trend is actually changing. That's just it's the disruption, right? So what can happen sometimes traders can see it go up like that, like, oh, it's going up, it's going up, but then it can just be retracing some other zone or a supply zone or demand zone or whatever, and then it can actually continue the trend it was on and go down, right? So I have a specific method for this, and what I do is I simply just wait for a retracement. So let's say the trend was bearish, like we wrote in that blue marker, right? The trend was bearish, and we had that unhealthy price action going up, right? Because healthy price action is what? Healthy price action is when we go up, down, or down, up, down, up. That's healthy price action. Unhealthy price action, unhealthy, is when price just shoots straight up or price just shoots straight down, right? And that is it's caused by these large sums of capital in the market. A lot of money moves the market, and hence makes these big giant candles that don't get retraced. And so that's essentially what demand comes from, and supply comes from. Whether you're trading ICT, SMC, supply and demand. And so what I do is, if this is a break of structure right here, where's the structure that has been broken? God, it's fucking leaves, stupid fucking thing. All right, so the structure that has been broken is where I'm drawing the line right here, right? That line that I just drew is the break of structure, because price, let's say price came out and broke that and disrupted what? This high. This was the current high where the arrow is pointing to. That's why I drew the line there, because if price broke above that, that would be a disruption, a break of structure, a disruption of a trend. And so, to me, to actually trade this and actually get proof that there is actually enough demand in the market, I simply need price to come back down to fill in this inefficient price action. And then once it does that, I need it to come back up again and create a second break of structure. So I'll draw that black line again. You see the little pattern I'm drawing? That's the second break of structure. So that lets me know in total we have 4 pieces of structure. We have this low, which is where the low that the demand started, and then it stopped here where I'm drawing that line. Then we came back and retraced that demand, that imbalance gap, fair value gap, whatever you want to call it, that demand, and then we broke structure again. So in total we have one. I have to be really simple with you guys because a lot of people make this complicated. 2, 3, 4, right? So we have 4 total structures. Sorry, we have 4 total highs and lows that have, that have been made. And now this is where I like to look for my trade. So now that I see that demand is exceeding supply, it's greater than supply because we have all this market structure in demand. And also you can turn on the volume chart, and then if there is actual demand, you'll see a spike in volume down here. You'll see a spike, a volume spike, and that will show you that your ideal is valid. So now we need to identify our current range. We identified the trend shift because we had those 2 breakup structures, right? And so now we need to identify our current range, not sideways price action. That's not what I'm talking about. By range, I mean we need to identify our current high and low. So our current high and low is this. I will actually number it. So you see number 4 and number 2? Those numbers, that's our high. The number 4 is our high and number 2 is our low. And so I'm actually going to circle them. Actually, no, you can understand that. Hold on. Let me just circle it. Hold on. 2 and 4 are our current high and low. And so if we're trading and we want to make money buying, we need to look in between 2 and 4, or high and low. And we do this by using, you can use a Fibonacci. I don't really use it a lot. I use this specific tool called a Gannbox, Gannbox. It's on TradingView. And I start by dragging the Gannbox all the way to the low part of the screen at number 2, and I drag it towards number 4, which is the high that's been the new high that's been made. And you see how we have those 3 green lines? Those 3 green lines are basically where it's helping us divide our range in half. So it's dividing it in half by premium prices and discount prices. If we're buying, they always want you to buy low, which at discount. And if you're selling, they always want you to sell high at they always want you to sell high at premium, which is where prices are expensive. That's why if you look on the right of this price scale here underneath my camera, you can see all how the prices increase. This is called a price scale. It increases. We go from 158 all the way up here to 160. That's our price level. Those are price levels. And so this is literally how you trade. So if I'm buying, I want to be looking for my actual setup at the lower half of the range, which is where I just shaded, and I'll actually make this green, the green part of the range. And if I'm selling, it's vice versa. So if I'm selling and if I'm in a bullish trend and then I get two breakout structures down, then I'm looking for sells at the high part of the range. So you can reverse this whole example if we were in a scenario of selling. And so now the question is, where in that green box am I going to be buying? So that depends on what you trade. On my channel, I trade imbalance gaps and I trade order blocks. Those are the only two types of trade setups that I take. And so I usually will choose, you probably heard of those fair value gaps and stuff like that. I only trade the lowest one. So I want to draw another box here in that green box, and it's going to be blue. And then I'm going to draw another one. Let's say you find two demand zones / two fair value gaps. Those two boxes are actually, you're going to want to choose the the lowest one, because sometimes price will break and come down to fill in an inefficient price action, and it won't just touch the middle one, it will go down and tap the bottom one. That's why I always go for the bottom one. And then what I'll do is I'll put my risk to reward tool here, and then my stop loss will always be under the actual fair value gap or order block, and then my take profit is always the next high or liquidity, which is in my case liquidity meaning where people have their stop losses, or retailer traders have their stop losses. It's like stop hunting, where they have them all sitting in the price at a certain price level. So liquidity can be double bottoms, double tops. It can be a trend line. I always target those as my take profit. And so this will be what your trade will look like. It will look like that. If this is how it would look like if you were in this scenario. And actually, this is actually what I'm expecting to happen on, this is UJ. But what I'm really expecting to happen is I'm expecting it to come down lower to that. You see that little blue box that I just drew that line to? That is the lowest supply zone. Sorry, the lowest demand zone / fair value gap. I'm waiting for price to come down here and react. And by react, I mean I need to see that two breakout structures. And then actually, I don't need to see the two breakout structures. You know why? Because if we go on the 1 hour chart, I already know that the trend is bullish. So if you know that the trend is bullish on the higher time frame, you actually do not need two breakout structures. You only need two breakout structures. Well, let's say the 1 hour chart was bearish, and then I was trying to buy. That's different, because then you need two breakout structures to confirm there's enough demand to even be trading. But since we already have our higher time frame bias, on the lower time frames, all I'm doing is I'm expecting one breakout structure that has a lot of unhealthy price action at this certain price level, which is down here at this fair value gap. And this is basically my demand zone. And this is pretty much all I wanted to share with you guys today. I hope you guys understood this. If you can watch the video again, I'm going to make it part 2 and make this more simple so you guys can see this in more live action. And I hope this wasn't too confusing. I've been trading for a couple years. Well, not a couple years. I've been trading for like 6-7 years, and it's literally took me that long to understand all of this. And this is why I'm simplifying like this. So I got profitable in the last 2 years. So if you guys actually want to like follow my Instagram and ask me questions, that's cool. I'm cool with that. I do have a Discord. It's not $100. It's not $1,400. It's not any of that. It's literally $49. That's all it takes to join my Discord. Inside the Discord, I have my community. I have a chart gallery, which is specifically designed to show you the different types of trade setups and trading tactics that I use, but actually visually shown on. God damn it! Visually shown on screenshots. I just knocked over one of my fucking statue things. Visually shown screenshots. So I have that, and then I have my trading examples. We do calls. We do all kinds of fun stuff in there. I wanted to price it $49 a month because realistically, if you're a beginner trader, you don't have like $400 or blah 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 to spend. So I don't want you guys to worry about that. I do have 101, which is priced a little bit higher. It's 197. I'm gonna be straight up with you guys. But yeah, so if you want to join Discord, cool. If not, that's fine. I have plenty of free content on YouTube to break it down. I just like to trade simple. I only take 2 trades a day max, and then I only trade 4 to 6 times a week. I do this to maintain my risk management so I can actually grow my accounts rather than just take multiple trades a day, because that's what I was doing when I was a beginner. I was just taking multiple trades a day and I couldn't understand what I was doing and why I wasn't growing my account and why I would like win one trade and then I would just stop after like taking like 6 more trades after that, and then my progress would completely reset. So if you guys are actually interested in learning more about that, you can check the link in the description. But if not, it's fine. I have plenty of YouTube videos on here. I have Instagram with reels and tutorials on there as well. And yeah, guys, I hope you guys like this.